So guys, the next part of the standard is lease payments. Here onwards, we will slowly go into the accounting of leases in the books of lessee. So before we do that, you have to understand the definition of lease payments. Now, he says that lease payment includes these 5 things. One is fixed payments, including in substance fixed payments, less incentives. That is number 1. Number 2 is variable payments that depend on index. Not every variable payment, only those variable payments which are dependent on some index. Examples we'll discuss. First, roughly you see. Lease payments also include the exercise price for purchase of an asset. We just now discussed option to terminate, 10 years lease, but lessee can terminate the lease at the end of 7 years also. In case he does that, then he has to pay some termination penalty. The termination penalty also becomes a lease payment. And number 5 is the expected residual value or guarantee residual value. If 5 things put together is called as lease payment. Now, in this, what is very easy to understand is this one. What is there to explain? You took a property on lease. Every year you have to pay a rent of 5 lakh rupees fixed. Very clear. Then he says that every year lease rent is to be increased based on inflation rate at the end of each year. So each year rent is not fixed. It depends on inflation index, consumer price index, or it is linked to LIBOR or MIBOR rate. If it is linked to some external index, then it is called as a variable payment. Number 3. Sometimes what happens is, sir, you take the asset on lease, let us say for a period of 8 years. In that lease, the lessor gives an option to the lessee that at the end of the lease period, if the lessee wants, he can pay some extra money and purchase the asset himself. Normally, after 8 years of lease, the asset should go back to the lessor, but if the lessee wants, he can pay some X amount and he can become the legal owner of the asset at the end of lease period. Now, if you feel that you are going to exercise such option, then what amounts are you going to pay to the lessor now? Next 8 years ki lease rents anyway you will pay. Not only that, 8th year ending you will also pay the exercise price also. Exercise price also you have to add it as a part of lease payment. 3. Number 4 is penalty. Just now told you, 10-year lease, anytime you can cancel the lease after 7 years. But in case you do that, you have to pay a penalty of 1 lakh. Now, should you include this or you should not include this or? It depends on whether you are likely to exercise the termination option or not. Suppose you are not likely to exercise the termination option. In that case, your lease term will be 10 years. 10 years ki lease payments you will consider. In that, you will not include the termination penalty. Suppose you say that yes, I can use the asset for 10 years, but I don't want the asset beyond 7 years. Therefore, I will definitely terminate the lease at the end of 7 years. In that case, your lease term is 7 years only. All the lease payments what we discussed in 1, 2, 3, all that you will consider only for a period of 7 years only. But at the end of 7th year, you also have to pay termination penalty. Even that is also part of your lease payment. 5th one is a case of guaranteed residual value. You might have definitely heard about this in your C-Enter. Guaranteed residual value ka meaning is, sir, suppose, one second, yeah, you give a new car to me for a period of 3 years on lease. I pay you monthly rent. After 3 years, the car goes back to you. Now, in next 3 years, I used the car in such a worst possible manner that when I give the car back to you, which is front and back, you are unable to identify. Now, what makes me use the asset in such a casual fashion? Because on first day only I know that the asset anyway I am not going to keep it. I have a right to buy, but I will not exercise that. I will anyway give it back to the lessor. Since anyway I will give it back to the lessor, this is not my asset, no. So I will use it in whatever manner I want. Somebody wants to travel, I say, why are you booking flight ticket? Take my car, free. Somebody wants to learn car, I volunteer. Somebody is going on a very bad road, I will give my car. So all this I am doing. Why? Because fundamentally it is not my car. So I spoiled the car effectively. ఒక డ్యామేజ్డ్ పీస్ ఆఫ్ వింటేజ్ ఎక్విప్మెంట్ I gave it to the lessor after 3 years. Lessor is taking that risk, no? So what lessor is not stupid, no sir. What he will do is, at the time of giving the asset on lease to you, he tells you that when the car comes back to me, a car should have at least a value of 2 lakh rupees in the market. Make that promise, then only he will give you the car. Suppose on first day only you feel that considering my usage, asset ka value after 3 years will be only 1,20,000. But I already promised how much? 2 lakhs. So at the end of 3 years, when the car goes back to the lessor says, you also come, and you both people along with the car will go to one valuer. That fellow tells that a car ka worth is only 120. Immediately lessor will look at you and you have to pay up an amount of 80,000 rupees. 80,000 included now. Sir, how much will be the fair value of the asset after 3 years? How will I know today, sir? Estimate and include. Sir, what if estimate changes? We will update it later on. Time being, lease payments flow, definitely guaranteed residual value should be included if you believe that you are going to pay up that amount. Suppose, normally, I don't know whether you know or not. When you are buying second-hand cars, okay, second-hand car ko separate market is there, no? There if you go and see, very commonly you will find one particular advertisement poster saying that car, resale car used by doctors. That is one of the advertisement which the reseller puts. Used by doctor means doctor is supposed to be very responsible and safe driver of the car, no? So a car is not damaged, a car is never taken for adventures and all, a car is very safely driven. So all the original parts are intact. This fellow is a doctor, so you can sell at a higher price. Are you understanding, sir? Suppose you are such user of the machinery or a car, you know that you are going to keep it like glass all 3 years. You have this obsession of cleaning. Every day you clean the car so much that first day how the car was, after 3 years also it will be the same shape and size and color. In that case, you are not going to pay up any money to the lessor on account of GRV. Don't include anything. Don't include in that case. If you are likely to pay, include. Otherwise, don't include. So how many points did we cover? 5. One is fixed lease payments, variable lease payments. Next one, right to buy option money. Third one. Fourth one is guaranteed residual value, and then termination penalty. The 5 points we have covered. Go and check the first one. Fixed payments, including in substance fixed payments. What is in substance fixed payments? Fixed payment, you know, every year I have to pay 5 lakh rupees. That's fixed. What is in substance fixed? In substance fixed ka meaning is, it sounds like variable, but it is fixed only. Like, suppose you and I make a bet. The bet is like this. Today if it rains, I will pay you 2,000 rupees. If it doesn't rain, I will pay you 1,000 rupees. So, whether it rains or it doesn't rain, anyway I have to pay you the first 1,000, no? I extra 1,000 is a contingent element. But even though it sounds like how much I will receive is variable on rain, true. Even though it is variable on rain, what is variable is the additional 1,000. The first 1,000 is anyway fixed. I have to pay whether it rains or it doesn't rain. That kind of payments are called as in substance fixed payments. Suppose, otherwise, now I will give you a proper example. You tell me that, you give me a machinery. You say that the lease rent is 10 lakh rupees or 100 rupees per hour of machinery used. You put a timer in the machine as to how many hours it worked. So the lease rent will be either 10 lakhs or number of hours into 100 rupees, whichever is higher. This is a condition. Now, in this, how much rent I will have to pay to you depends on what now? Number of hours used. So it sounds like what? Variable. But it is not variable. Why it is not variable? Adi in substance fixed. Even if you use for 1 hour also, or you don't use also, anyway I have to pay you 10 lakh rupees. But if you use 1500 hours, then I have to pay 15 lakh rupees, correct? Or 15,000 hours, then I have to pay 15 lakh rupees. Extra 5 lakhs is a variable component, but 10 lakhs is anyway fixed. No, these are called as in substance fixed payments. They sound like variable, but there is a fixed element in that. Catch that. Okay, so that one. Next one. In the first box only, they used a term called as less incentives. What incentive are you talking? Now look at this. Suppose, sir, this is a building in an area called as Abbots in Hyderabad. In this building, one floor X Limited has leased and they are operating in this floor. Now, somewhere near Gachibowli, completely almost near ORR area, one new building got constructed by ABC Limited. This fellow is the owner of this building. His intention is, we constructed a posh building, now we have to give it on rent. Lot of software companies are there, we'll give it somebody on rent and make a lot of money. Software recession is there, so nobody came to take your property. Now you are desperate to find a tenant for you. Otherwise EMIs you are unable to pay for the loan what you have taken to construct the building. Then you came to know, or you came to meet X Limited fellow in some meeting. As a part of discussion, he told you that he is operating from a rented premises in somewhere in Abbots. You asked him, sir, cancel that lease and shift into my top floor. Full view is there, lot of development is there. Here your business will grow. Please relocate from old building to new building. X Limited says, sir, if I have to relocate, I have to cancel the lease agreement, existing one. If I have to cancel that, I have to pay penalty. A penalty is difficult for me, sir. ABC Limited says, penalty kada, I will pay. I will reimburse you, no? Then you said that, X Limited said that, sir, all my chairs, tables, computers, manpower, all these have to shift from there to here, sir. That also, okay. ABC Limited pays. Then X Limited says that, sir, all is good only, but in this existing building, I made some modifications and all that costed me some 3 lakh rupees. If I you come to your building, again I have to incur all that modification cost. ABC Limited says, don't worry, that also I will pay. These are all called as lease incentives. Actually, for giving the asset on lease, X Limited should pay money to ABC Limited every year or every month. But sometimes lessor also agrees to pay money to the lessee in the form of lease incentives. So what you should do is, year 1, 2, 3, 4. Suppose your lease payment as a lessee every year is 6 lakh rupees. 6 lakhs, 6 lakhs, 6 lakhs, 6 lakhs. But your lease incentives totaling to how much now? 2 lakhs plus 3 lakh 50, 4 lakh rupees. ABC Limited told that he will pay you 2 lakhs in first year, 2 lakhs in second year. As a result, your lease payments are also now reducing. They won't reduce. Actually, 6 lakhs will pay separately, 2 lakhs will receive separately. But accounting purpose ki lease payment should be considered after deducting any lease incentives. So if this 4 lakhs low, 2 lakh is coming in the end of first year, remove it there. Another 2 lakh is coming at the end of second year, remove it there. So your first year ka lease payment is 4 lakh, second year ka lease payment is 4 lakh, thereafter it is 6 lakhs, 6 lakhs. So lease incentives ka treatment is like this for LSC. I hope you are able to understand. Next. Second aspect in this, variable payments. Sir, variable payments only one small point is there, should be careful with that. Suppose, sir, 0, 1, 2, 3, 4, like that, 10 years lease contract we made. Lease rent is decided as 1000 rupees per annum. And it is said that every year lease payment has to be increased based on consumer price index at the end of each year. Suppose first day when you took the lease, on the day consumer price index is 100. What is your lease rent decided now? 1000. What you have to do basically is wait for 1 year. If after 1 year consumer price index becomes 105. How you have to do is, if 1000 is a lease rent for 100 base, for 105 how much it is? 1050. That is a lease rent you have to pay at the end of first year or at the beginning of second year. It goes like that. But third year ka lease rent will again change depending on how much is the CPI index at the end of second year. Like that it works. But it keeps on updating. Okay. Now, but today I am standing on the commencement date, first day. I want to write my entry called as ROU asset account debit to lease liability. E entry, if I have to write, I should know the amount of lease payment on the first day itself. What I know is 1000 rupees I know. But actually I will not be paying 1000. I will be paying more than that. How much more will you pay? It depends on CPI index each year. First year ki, let us say you paid 1000 here. Second year ki, second year beginning lo you will pay. But here how much you will pay depends on index at the end of first year. How much you will pay here depends on index at the end of second year. It works like that. Now what our standard says is, you are not allowed to estimate these indexes. You cannot sit and say that, sir, today 100 sir, after 1 day it will become 105, after it will become 108. So accordingly I will estimate. No. Estimation not allowed. Sir, then what should I do? Index and all you should not estimate. What you should do is, first day, commencement date ki, whatever index is there, assume that only will prevail for the rest of the period. Assume lease payments like that and do the calculation today. But we all know after 1 year CPI index will not be 100, it will be more than 100. When it changes, you will remeasure the liability again. Remeasurement later on we can do. But first day variable payment estimation lo, do not estimate the index itself. So next 10 years ka LIBOR rate I will estimate and I will update the lease rents. No. No. So take today's index. Assume that this index only will prevail for all the years and do it off. Suppose your agreement is not like this. Your agreement is, every year lease rent has to be increased to the extent of risk-free rate of the government. Risk-free rate will not be constant. No, so it keeps on changing every year. So first year how much lease rent you have to pay? First year ending or second year beginning? You have to pay 1000 plus some interest rate here, which prevails at the end of year 1. Sir, I will stand today and I will estimate, sir. No. What you should do is, if first day interest rate is 10%, assume that 10% will prevail for all the 10 years and make estimates. So here you will be paying an amount of 1100, here you will be paying an amount of 1210, here you will be paying an amount of 1331, like that 10% you go on adding. In reality I am not going to pay 1100, I am not going to pay 1210, I am going to pay 1000 plus something extra which is determined only on a future date. I am not allowed to make estimate about indexes or interest rates and all. You can't do that. What you have to do is, whatever is prevailing on starting date and a commencement date, take that and assume that only will prevail for the rest of the period and accordingly measure the lease liability and recognize this entry. Later on when clarity comes, at that time we will remeasure the lease liability. How to do is part of our syllabus only, we will learn anyway. Even sir, whatever you wrote, this entry later on you will write again with updated number. So tell me, first day I am assuming this, I know that interest rate is 10%. So first year ka lease rent is how much accordingly? 1100. First year and second year beginning. Next year 1210. Next year 1331. When will you get clarity, you tell me? But first year ka interest rate, when will you get clarity, you tell me? At the end of first year? Suppose sir, even if at the end of first year you come and tell me that interest rate is 12%. Because of this, clarity came only about one number. Which number? Tomorrow morning you have to pay 1000 plus 12%. 1120 you have to pay. What about this? Do you know all that? Daniki clarity appadiki raadu sir meeku, unless the time progresses. Isn't it? So that's why the standard gives a simple technique. What it says, first day, whatever rate is there, assume that only will be there for all the years and do it off. When you come to first year, what is the latest rate now? 12%. Assume that 12% will be there for all the remaining 9 payments. and remeasure the lease liability. When you come to third year, suppose interest rate is only 8%, apply 8% for remaining 8 payments and remeasure the lease liability. This is how the standard asks you to do, because index and inflation rates and market interest rates are something which change every year. There is no point of making year on year estimate. That is too much into future. That much future if you go, your numbers are not trustworthy. What is easy and simple? Take today's rate. Assume that only will prevail for all the years. But you know in your heart that that is not true. So later on you may have to remeasure the liability. Am I clear here, sir? Variable payments. Now listen to this, sorry, see this part correctly. Variable payments means which variable payments is you talking? Variable payments that are dependent on index like CPI, any other index, or market interest rate, something like this. Suppose the lease rents are based on, are variable A, but not based on these. They are not lease payments. Contract law lease payments say, not lease payment definition as per 116. Example, the supplier tells me that, or the lessor tells me that, on every sale I make, I have to pay 5 rupees to him. Apart from the fixed payment, on every sale I make, I have to pay 5 rupees to that fellow. I agreed. So is it lease payment? The answer, yes. In general talk law, that is what lessee pays to the lessor, but it does not satisfy the lease payment definition as given under Ind As 116. The treatment of such payment is whenever you pay, throw it off into P&L account as an expense. Every variable payment will not come into ROU asset account debit to lease liability entry. E entry you have to pass, you should consider only these payments whatever we are talking. Extra whatever you pay are not part of this journal entry. Then exercise price you will include only when it is reasonably certain. Termination penalty only when it is reasonably certain that you are going to terminate it. Expected residual guarantee will include only when you are likely to pay some amount to the lessor when you return back the asset. Now I will make a statement, see whether you are able to understand or not. 3 and 5 cannot coexist. Both will not be there in any sum. Both cannot be there in any sum. There won't be a case where you will add exercise price also, GRV also. Why? GRV is something which you have to pay to the lessor when you are giving back the asset. Why will you give back the asset and at the same time when you are thinking of buying the asset for yourself? They both cannot be there. Similarly, 3 and 4 also cannot be there. If you are paying termination penalty means asset goes back to the lessor, you are walking off from the lease property. So obviously exercise price to buy the asset will not be existing for you. Even the maximum, sir, it's not like everything will be there. In this some cannot coexist also, some will be countering each other. You should be open for that. Now in this everything is easy only. Just to read this alone one part once for clarity purpose, rest all are very easy. Variable lease payments are defined as the portion of payments made by lessee for right to use an underlying asset during the lease that varies because of changes in facts and circumstances occurring after the commencement date other than passage of time. For example, payments linked to consumer price index, payments linked to benchmark interest rate like MIBOR, LIBOR, etc. Payments to vary to reflect changes in market rental rates. Such payments are included in the lease payment and measured using, look at the wording, prevailing index or the rate at the measurement date. Measurement date ante commencement date. Tarvata subsequently we remeasure the lease liability if there is a change in cash flow. You are not going to estimate that index and all. Question stars are all that you should not consider. How many traps on it? You should be very careful with this. Sir, what about other variable lease payments? What did we discuss? Every lease payment other than this which is variable in nature, you will have to throw it off into PRL. Based on sales, based on customers, based on number of units manufactured, based on kilometers traveled. They are not related to benchmark index. They are not related to consumer price index. They are not related to interest rates. Our type of adjustments. They are all payments only, lease payments only, but not lease payment according to the definition of the standard. They will go to PRL. Which lease payments will go into your main entry is a remaining one, whatever we have discussed. Okay, discounting rates and all we will talk in a while. Now let's come to the proper accounting part. Very easy, sir. Extremely easy. Lessee books law, sir, you just have to write only one entry as we discussed in the start of the class. What is that? Right of use asset account debit to lease liability. How our standard explains is lease liability should be recorded at what amount? ROU asset should be recorded at what amount, and separately they explain. Sir, how can you rate separate numbers? If separate numbers, if you rate entry will not tally, no sir. Array entry if it will not tally, you will write some bank, no, advance, no, something else will come. But how to measure? Initial measurement of ROU asset lease liability separately explained. You listen, confusion will not be there individually. First one, he says that lease liability should be measured at present value of lease payments. That's it. Sir, lease payments means what, sir? Just now we discussed, no, other lease payment, which means it includes fixed lease payments. It includes not every variable which are based on index or based on some benchmark interest rate, only those. It includes option price to buy. It includes termination penalty. It also includes guaranteed residual value, fixed less any incentives. Ivanni lease payments out there, sir. Lease payments you estimate, discount everything to today. When present value will come, our number will become your lease liability amount. That's it. Now, as usual, routine question every time, as I tell you, whenever you use the word present value, it becomes your duty to ask me what is the discounting rate. You cannot use any stupid rate as discounting rate here. Now let's come to discounting rate. Discounting rate, lo, sir, standard gives you two priorities. First priority, IRR only, but that's called as IRIL. It's called as interest rate implicit in lease. IRIL. Now what is IRIL? We'll talk. If IRIL you cannot identify, because IRIL is a number which is related to lessor, not to the lessee. But you are doing accounting in the books of lessee. Effectively what it means is, because of this lease transaction, how much return lessor is earning, you work out that. Our rate should be your discounting rate. But how much return lessor is earning every time I need not know. No. When you do not know, then second priority you come. Second priority is, this one you will definitely know. This is called as incremental borrowing rate of lessee, of course. What is the meaning of incremental borrowing rate? If you go to the market and try to raise money today, how much interest rate will the bank charge to you? That's the incremental borrowing rate. Second one is always in our control. All I have to do is go and ask for a loan from a bank. What will bank say? Are Babu, show, bring your balance sheet. Balance sheet already 4 loans are there. Only 5th loan you are coming. Yes sir. Pay interest of 14%. Okay, 14% should be used as discounting rate. Incremental borrowing means additional borrowing if you have to raise now, at what rate I can grade that. IRIL is nothing but this. For 2 minutes we'll go into lessor shoes, immediately come back. So tell me sir, lessor is who? Owner or user? Lessor is owner or user, sir? Lessor is owner. Do you think that lessor is a person who buys all the assets in the world, put them in a godown, put a chair outside the godown and wait for lessee to come one day and take the asset on lease? No. Lessor is owner of the asset only, but he is not stupid enough to buy all the assets and wait for some prospective lessee who may walk in one day. Lessor ante baga cash party, sir. He will not buy all the assets in advance and hold. As I told you earlier in an aeroplane example, that fellow will be sitting on his money. You came to me, sir, I saw that aeroplane, sir, I want, sir. Okay. Sign all this, signed. Then what I will do? I will go pay 500 crores to buy an aeroplane, and I give this aeroplane to you on lease for a period of 8 years. Next 8 years ki, what rents I am charging to you, you already know, no? Because I already told you. That means, effectively as a lessee, you know at what rate I purchased the asset. You know what rent you are paying to me. Can't you work out my IRR? As a lessor, sir, first day, I spent 500. Lease period, let us say, 5 years. Every year I am charging 180 rupees from you as lease rent. You are lessee only, but for 2 minutes come into the shoes of lessor. Lessor today spent 500 lakhs or 500 crores. He gave the asset to you and you are paying 180. Not only this. At the end of 5th year, the asset goes back to the lessor. When asset goes back to the lessor, the asset will have some value again. Let us say asset ka value towards the end will be 150. This is the residual value. All you have to do is identify a discounting rate which equates the present value of future cash inflows of the lessor to fair value of the asset today. Fair value is purchase price indirectly. A discounting rate, whatever is there, this is IRIL of the lessor. That should be your first priority discounting rate. IRIL is never for the lessee. It is lessor ka discounting rate. But you will use that for booking your interest expense every year. Why? Sir, he is making interest income from me. Whatever income he is making, that only should become my expense also, no? So ideally that should be your first priority rate. If you are able to work out all this. Sir, but in my case, no, sir. A lessor a manufacturer of the asset, sir. So first day fair value we do not know. The example what I told you, this fellow went and bought an asset. I know at what rate he bought, at what rate he is giving me, how much he loaded in that I know. But he himself is a maker of the asset, or he is giving me a second hand asset on lease. I will not be in a position to work out the fair value of the asset on the first day. Appudu IRIL you will not get. Then you will settle for IBR. That's it. That's all you have to do from lease liability point of view. All you have to remember is whatever our 5 lease payments or 5 items are there, no, our 5 items put at one place, discount it to today, one lump sum figure will come, credit the liability entry, khatam, over. But now let's come to asset part, ROU asset. Very, very easy, sir. ROU asset should be recognized at what amounts, you know. First one, lease liability amount. That is nothing but present value of lease payments. Whatever amount to you credited liability, ade amount to asset also you should debit. Very obvious, no sir, otherwise entry will not tally basically. It anyway you have to do. Apart from this, some extra also you have to do. Like add initial direct costs. For entering into this lease contract, I incurred some legal expenses, registration charges, stamp duty I paid, valuation expenses I incurred. Normally you tell me, sir, when you buy an asset, all the incidental costs and all, you are capitalizing it to the cost of the asset, no? Like that only. Here all the initial direct costs, what you incur in a lease transaction, they are capitalized directly to ROU asset. As simple as that. That is very easy. Next one. Add payments made to lessor before commencement date. Now sir, as a lessee, whatever payment I make to the lessor, they all ideally should fall into the definition of what? Lease payment. Correct? Our lease payments ka present value you already considered here. What is this one again? This is also a payment made by the lessee to lessor only, but when before the commencement date. Imagine, sir, ఇప్పుడు ఈ ROU asset account debit to lease liability entry whatever is there, ఈ entry on which date can you pass? Only on commencement date you can pass, not before. Why not before, sir? Asset was not there with you before. Asset came today only. When asset came today only, ఈ entry also will be passed today only. But 10 days back only I paid advance money. ఒక లీజ్ పేమెంట్ ముందే కట్టేశాను సార్. When I paid that money, no, I cannot write this entry, sir. I could not have recorded this entry. What entry I would have recorded? Advance account debit to bank. I want to debit ROU asset. Debiting ROU asset is correct also when you get the asset. But before commencement date, if you make any payment, the asset payment I know, but I cannot debit to asset ROU asset because asset is not there physically in my hands. But when the asset comes, what will I do? The advance on a account I will cancel and I will adjust it to ROU asset. Sir, what about lease liability? What liability? You paid already, no? Liability means what? Whatever is not paid will become liability. Whatever you already paid, why will I adjust it to lease liability? So the entry what I should pass now for this one. What is the entry I should pass for this? If you have to get this effect of adding it, the entry what you have to pass is ROU asset account debit to advance. Do you understand what I am trying to say? Before the commencement date, you make any payment, the lease payment. But at that time, I did not write ROU asset because asset was not physically there with me. That's not the commencement date. So on commencement date, you wait and then adjust it to ROU asset. Lease liability should not touch because this is an amount which is already paid. Liability means which are payable in future. Right? Minus. Lease incentives received before commencement date. What is this? Already we considered lease incentives where while computing lease payments, in that fixed payments, fixed payments I already deducted lease incentives. What you deducted is future lease incentives which you have to receive, that you deducted. What I am talking now is lease incentives which you have already received before the commencement date. Look at this, sir. Example I gave you, that fellow agreed to pay me 4 lakh rupees lease incentive. 4 lakh rupees lease incentive. But he said that, sorry, 4 lakhs I will not pay you today. I will pay you in first year ending, second year ending. So you tell me, sir, standing on commencement date, is the lease incentive received, lease incentive receivable? Receivable. Since it is receivable, it is adjusted into your lease payment calculation. But imagine my ABC Limited told, sir, take 50,000 right now. On inception date only he gave off. When that fellow paid me money, how can I not write an entry? I have to write an entry, no? I debited bank account. Credit what? Credit what? So first day when I received, I open a temporary account called as lease incentive account debit. Sorry, bank account debit to lease incentive. I will wait till the commencement date. On the commencement date, when I record the ROU asset account debit to lease liability, then whatever amount I already received, that I will reduce it from the cost of the asset. Cost of the asset. Cost of the asset means what, sir? Whatever I pay is cost. Whatever I receive is reduction of cost, opposite of that. If it is receivable now, automatically lease payment it would have been adjusted. But whatever is already received before this date, that was not adjusted because ROU asset account I opened today. If yesterday I received some money, a money bank account debit to lease incentive and entry I wrote. So today what entry you should pass is lease incentive account debit to ROUs. Effectively this is the entry you are expected to pass. Suppose you took a nuclear power plant on lease which is valid for a period of 20 years. Once 20 years is over, you have to dismantle that and restore the entire environment back to original condition. There is a decommissioning liability. You know what is to be done with that? Add present value of decommissioning and restoration cost. So this number will become your ROE asset. If all these adjustments are not there, no, then ROE asset to lease liability both will appear at the same amount. But if all this drama is there, then ROE asset ka number will be different, lease liability ka number will be different. Sir, till here is it clear? Sir, is standard theory points are over, sir. Hereafter you will be doing only practical case thinkings and all. It is not like 115 where every point of deep, some hidden story is there. You need an example everywhere. It's not like that. It's a very simple standard. And we have crossed the dry part now. You should be able to understand everything. Link with the numbers. All the questions when you do, more clarity you will get. Now, so basic entry is this. ROU asset account debit to lease liability. But of course, you may have to write entry like this overall. ROU asset account debit to lease liability. Then you may have to write ROU asset account debit to expenses for direct cost. You incurred some stamp duty and all. Expense to bank you wrote. ROU asset account debit to expense you write. Then you may have to write ROU asset account debit to any advance payment. You may have to write lease incentive received account debit to ROU asset. You may have to write ROU asset account debit to present value of decommissioning liability. Do you understand, sir? This table ka is accounting effect. This entries raste, this effect will come. I hope you are able to understand what I am trying to say. Okay. Next one. Now let's talk about subsequent measurement. Very obvious and very easy. Subsequent measurement means on the balance sheet date. How will you measure? You will apply cost model for this, which means your carrying amount of ROU asset is equal to initial recognition amount minus accumulated depreciation. All you have to do is just to provide depreciation, nothing else. Nothing else. Let's come to lease liability. So tell me, a lease liability is measured how on first day? Present value of lease payments in future. Correct, sir? Tell me, sir. The moment any liability which is measured at present value on first day, that is effectively as good as you are applying amortized cost method, ACM. Every year book interest expense, add it to lease liability. Entry will be interest to lease liability. Whenever you pay lease liability to bank, life goes on. Sir, our lease payments are fixed, sir. Mostly they are fixed. Sometimes they are not. When they are not, variable lease payment is there. What did you do? First day, whatever interest rate is there, that only you applied for all the 10 years. But later on clarity came. You will again update. Again you will remeasure. A drama is again there. That is anyway going to happen. But subject to that, all you have to do is, this is similar to amortized cost method. All you have to do is just apply ACM. That's it. Here one very important beautiful point is there. Guess. Put asset life 40 years, sir. I took the asset on lease for 10 years. Depreciation should be provided for basis of what? 10 40 year. Asset life 40 years. I capitalize ROE asset. Depreciation each year when I calculate, denominator I should keep 40 years in mind, 10 years. Asset should be depreciated over a period of 10 years, or asset should be depreciated over a period of 40 years. So what do you feel? Lease period is how much, sir? 10 years. So ideally you should depreciate it over a period of 10 years. Standard language is asset must be depreciated over the expected period of usage. Then that is lease period only, no? Where is the uncertainty in this? Slightly. Imagine your lease payments contain an option to buy the asset at the end of 10th year, and you are reasonably certain to exercise that option. Therefore, option price is also part of your lease payment, which means even though lease period is 10 years, the amount what you are paying will entitle you to use the asset for total 40 years. Upon depreciation should also be done for 40 years. There are some assets where once you pay all the installment lease payments, automatically you become the owner of the asset. In that case, you have to depreciate the asset over the life of the asset. The answer is, if you are going to become the owner of the asset eventually, either automatically or payment of option price, whatever reason it is, if you are going to become the owner of the asset, then you must depreciate the ROE asset throughout the life of the asset and not over lease period. If asset reverts back to the lessor at the end of lease period, then definitely depreciation must be provided only during the lease period itself. So there you should be a little careful. So if asset reverts to lessor at end of lease, then depreciate the asset over the lease period only. If lessee becomes owner of the asset, why will he become owner of the asset? Some cases naturally, once you pay lease installments for 10 years, automatically ownership is transferred. In that case, you will become. Or there is an option to buy and you are reasonably certain to exercise that option. In that case also you will become. In that case, depreciate over the life of the asset. That's it, sir. Lessee accounting is over. You just have to see how all these are applied in numericals. And then what is pending in this lessee's point of view is reassessment of lease. Reassessment means I thought that I will extend the lease, but now I feel that I will not extend the lease. Lease term will change. I thought that I will not buy the asset, but now I feel that I am going to buy the asset. I included my lease payments based on interest rate prevailing on commencement date, but as that time progresses, clarity came. So my future lease payments have to be remeasured again. All this will fall into reassessment category. And how to do, we have to learn. After that, last aspect is a modification of lease. I entered into a lease contract got modified. What should I do with the modification? Like how modification was deep in your 115, here also it is like that. But easy only, at the end, everything is easy. Chalo sir, let's move on to some questions now. Small questions, I'm just postponing it. Later on, we'll do, subject to time, which most of them I've already covered, sir. You will not find any difficulty. Directly, we are hitting the big questions. Come to question number, please, 27. A question will help you to understand the concept of variable lease payments in a much more better way. Entity L enters into a lease for 10 years with a single lease payment at the beginning of each year. Careful, lease payments are payable at the beginning. Sir, some half of the questions, lease payments are paid at the beginning only. If you casually draw the table for discounting and write first year ka discounting rate over some, thereafter you need not check also. A kind of mistakes don't do, be careful. The initial lease payment is 1 lakh. Lease payments will increase by the rate of the officer. Please correct the spelling. Many spelling mistakes for some bad reason. Anyway, by the rate of LIBOR each year. At the commencement of lease, LIBOR is 2%. Assume that the interest rate implicit in lease is 5%. How lease liability is initially measured? Now listen here. First day I will pay 1 lakh. Ante year 1 ka beginning lo first year ka lease rent. Second year beginning, how much I have to pay actually? first year ending ka interest rate LIBOR I have to take, that I have to add it to 1 lakh. Suppose first year ka interest rate is 3.5%. So 1 lakh plus 3.5%, 103,500 is what I have to pay on second year beginning. Second year ending lo one more interest rate will be there. That I have to add to 103,500, then I will get next year ka lease rent. Like that you have to do ideally. But standing on day one, our standard asked you not to estimate the future period ka index or future period ka interest rates. What you have to do is assume that whatever interest rate is prevailing today, that only will be there for throughout the period of lease. What is interest rate today? 2%. So take your 1 lakh, go on adding 2%, 2%, 2%, 2% every year. Like that, do it for 10 years. Every year, whatever amount comes, amount you accept it as lease payment of that respective year. Actual payment will not be this. Actual payment will be something else. But that something else I do not know today. Don't estimate. Take today's rate and predict the rates. You can see all these numbers are based only on 2%. Once you know the lease payments, discounting rate that fellow gave you, IR, IL, a 5% discount gotten, sir, present value will come. Happily go and write the entry. Khatam, over. What entry will you write with that? We have only one entry. ROU asset account debit to lease liability. That's it, over. In this, what mistake you should not do is estimating any mistake you should not do. It would have been better had he given some estimated LIBOR rates also. You should have ignored them. Next one, sir. Question number 28. Entity Y and Z execute a 12-year lease of a rail car with the following terms on Jan 1, 2016. Executing the terms means what you know? Lease agreement date. So this January 1st is called as inception date. Inception date is relevant only for identifying whether the contract is a lease or not. That you need not evaluate. That fellow is shouting that it is a lease. Accept it. Continue. The lease commencement date is February 1, 2016. Commencement date is a date on which asset is handed over by lessor to the lessee. This is relevant for accounting of ROU asset account debit to lease liability. So 1 month gap is there, no? In 1 month a lot of drama happened here. Entity Y must, akkada pay ane word is missing, please add that. Must pay entity Z the first monthly rental payment of 10,000 rupees upon execution of the lease. Execution is again inception day you paid off 10,000 rupees. And Z will pay Y 50,000 cash incentive to enter into lease payable upon lease execution. So there is an advance payment before commencement. There is a lease incentive also before commencement. And this fellow incurred 1,000 rupees initial direct costs which are payable on Feb 1, 2016. Next. Entity Y, under the customer, the lessee, calculated the initial lease liability as present value of lease payments discounted using incremental borrowing rate. Why? Because IRIL could not be readily determined. First priority not there, second priority, so he worked out the discounting. And he got the amount already as 8,50,000. He's asking, how would lessee company measure and record this lease? What is the question number, sir? 28. Tell me, sir. There are two stages here. One is before commencement of lease. Of course, that is inception date in this case. What did you do before commencement? Two things you did. You made advance payment, correct? So advance lease rent you paid. How much did you pay? 10,000. So the entry you should have recorded is this. Sir, I paid rent no, sir. So I will write ROU asset account debit to bank. Wrong answer. Asset is not there. How can you write ROU asset? Next. Not only this, you also received some money from the lessor for lease incentive on a name to you received. Receive. on commencement. The basic entry, amount you need not work out. That fellow told you. What is the present value of lease payments? 8,50,000. Then you incurred initial direct expenses of 1,000 rupees for all this initial direct costs. Since you incurred on directly on 1st Feb itself, commencement date, I am directly writing ROU asset account debit to bank. You could have written expense to bank, ROU asset to expense, even that is also okay. Ultimately effective entry is this only. This is for 1,000 rupees. What else I have to do? Already paid advance lease rent is there, no? That is also cost of the asset only. Adjust it here. ROU asset account debit to advance lease rent. How much did you pay? 10,000. Next, you already received lease incentive, so your cost of the asset has come down. Lease incentive account debit to ROU asset, 50,000. All these entries on which day are you passing? Commencement date, 1st February you are passing it off. So what is the carrying amount of ROU asset? Work out. 8,11,000. No? Correct. That's it. That fellow did a mathematical table of that. We wrote entries because the question what they asked is, how will you record this? Record ante not with pen, no sir, entries are. But mathematical table he did. So these are the entries. Our table only I copied and gave it in your concept material. Whatever table I wrote earlier, ROU asset must be debited with PV of lease payments plus direct cost plus this advance payment minus lease incentives plus PV of decommissioning cost. Our table only I wrote in your material. Anyway, next question please sir. All this we have done already. Means we have discussed already. No, it's a dismantling cost is asking. You can go through it. Come to this one, 30. Entity ABC enters into a 3-year lease of equipment. Entity ABC agrees to make the following annual payments at the end of each year. Careful sir, some it is different now. He's saying end of each year. 20,000 first year, 30,000 second year, 50,000 third year. For simplicity, assume that there are no other elements to the lease payments. Brackets, so purchase option, lease incentives, initial direct costs, they are all not there. So the only payments you are making is 20, 30, 50, 1, 2, 3 years low. Assume a discounting rate of 12%. Brackets, so he is saying that I am taking incremental borrowing rate only because Liril cannot be worked out. Entity ABC depreciated ROU asset on a straight line basis over the lease term. How would ABC account for the said lease under Ind As 116? A plain vanilla question, sir. All you have to do is our lease payments discount it first. You will get an amount of 77,364. Don't solve. See. What is the entry you will pass now? ROU asset account debit to lease liability 77,000 chiller. And the 77,364 should be depreciated over a period of 3 years. And our lease liability you will go and apply ACM accounting. You all know how to apply ACM accounting? That's all. Not your range actually. Next, 31. Company EFG enter into a property lease with entity H. Easy sum, but should be careful. Enter into a property lease with entity H. The initial term of the lease is 10 years with a 5 years renewal option. The economic life of the property is 40 years and the fair value of the leased property is 50 lakhs. Company EFG has an option to purchase the property at the end of lease term for 30 lakhs. What is he trying to say is, your lease term is how many years? 10 years. After 10 years, asset ka value is going to be 50 lakhs. But you have a option to buy the property at the end of lease term for 30 lakhs. What do you feel? The option is likely to be exercised. Not likely to be exercised. Will you become a legal owner of the asset eventually? Yes or no? Yes. You should not argue that, emo, how will I know whether the asset is needed for his business or not? Atlant pitchy judgment cheyakoodu, sir. If it is not needed also, he will buy and he'll sell it in the market. No. Market value is how much? 50 lakhs. You can buy the asset at 30 lakhs. Will you exercise the option or not? You will definitely exercise. Whether it is needed for you or not, you will still buy the asset. If it is needed, you will use. Not needed, sell it outside. So definitely you will become legal owner of the asset. Since you are going to become legal owner of the asset, likely to be exercised, option money 30 lakhs should be part of your lease payment calculation, and consequently that will enter into your ROU asset account debit to lease liability wala entry also. Continue. The first annual payment is 5 lakh rupees. Look at this. In the beginning of the year, with an increase of 3% every year in the beginning thereafter. Closely observe. This is not variable. Even fixed payments. Why fixed payments? At what rate it is increasing? Any uncertainty is there? No uncertainty. Pakka fixed payments. The implicit rate of interest is 9.04%. Entity H ante evudu? Lesser. Gives company EFG an incentive of 2 lakhs payable at the beginning of year 2. He will pay me lease incentive not on first day, not before commencement, but second year ka beginning lo he will pay me. Actually second year ka beginning lo I have to pay him lease rent of 5 lakh rupees. But he will give me 2 lakh rupees. We'll adjust it up. Net lease payment you have to take. Fixed payment should be net of the incentives. Continue. Which is to be used for normal tenant improvement, whatever. Company EFG is reasonably certain to exercise that purchase option. That is visible apparently. How would EFG measure ROU asset and lease liability over the lease term? Now, take your calculator, sir. First year beginning low, first day and a 0 time ki, how much amount you are paying? 5 lakhs. Second year beginning or first year ending low, again you have to make one more payment. That will be how much? 5 lakhs plus 3%, that is 5 lakhs 15,000 minus 2 lakhs. So second year beginning amount should be 3 lakh 15,000. Third year beginning lo how much will you pay? 315 plus 3 చేస్తే కొడతారు sir. Every ఇస్తాడు lease incentive. 5 lakh 15,000 plus 3% you have to do. How much is that? 5 lakh 30,450. I hope you understood. Like that you have to predict for all the 10 years. 10th year ending low, you should not forget to include the option purchase price and discount everything. If discounting low, mistake you can do is a first day 5 lakhs you paid, no, then PV factor is 1. That's not first year ending. Beginning and I wrote, study material stupid fellow just wrote year. Beginning of the year, PV factor should be 1. You don't like that presentation, you make it as 0, 1, 2, 3, 4, 5. Here 0 means today, no? So directly PV factor 1 you will write and you will not have any confusion. That also is okay. Because second year beginning anna, first year ending anna, it is the same thing. So that way also you can change or you can get used to it. What is there? So if you discount everything, so you got some lease liability. Then he wrote the entry ROU asset account debit to lease liability. Then he wrote one entry, sorry, one table. A table nobody asked, but he only did voluntarily. What is that table is? ACM table he did. What is ACM table? It will give you interest expense of each year on your lease liability. Now here where you should be careful is, whatever ROU asset you are recognizing here, that should be depreciated over how many years? 10, 30, 40, 40. Because eventually you are going to become the owner of the asset. But anyway, after reading this, I observe one point. This fellow told that the fair value of the asset is 50 lakhs. At the time of reading that question, I assumed that if 50 lakhs will be the fair value at the end of 10 years. But he simply told that fair value is 50 lakhs. He wouldn't tell you 50 lakhs fair value is on which date. He did not tell you in the question. But when I measured the lease liability, its present value is coming as 50 lakhs. When liability value is 50 lakhs, ROU asset value also will be 50 lakhs. Therefore, it indicates that the 50 lakhs is the fair value of the asset, not at the end of the year, but as on today. But we have got nothing to do with the fair value. Our accounting will not happen at fair value of the asset. Our accounting will happen based on lease liability of present value only, not based on fair value. It's just that our interpretation is wrong, so I was showing you that. That's it. Depreciation should be done over a period of 40 years, so should be careful. Whatever we have discussed till now, completely numericals are over, sir. But even sir, lease accounting is the most simple thing you can learn, because all you have to understand is our lease payments, which number should be included, which should not be included, and at what value you should include. If you know that, then discounting. Discounting no two choices, or rather two priorities. One IRIL, second one is IBR. Discount it. Whatever present value comes, with that record the ROI asset, subject to this further adjustments here. Khatam. ROI asset means the depreciation you provide, lease liability means the ACM you provide, as simple as that. Here onwards, further dramas are. Accounting is over, subsequent measurement over. Now we are talking about remeasurement. Sir, first of all, why should I remeasure the lease liability? You don't see anything, casually guess. Remeasurement will happen only when whatever lease payments you have included on the first day, in that some changes are happening. Like, think randomly, whatever comes into your mind. Your entire lease payments, if you remember in one question, you took 2% and you added off every year. But after 1 year, I will get latest interest rate. No. Our latest interest rate, so you have to remeasure the entire lease liability. That is one reason. Reason number 2. Purchase option, right? First day I thought that I will buy the asset. 5 years is over. I am not liking this asset. I feel that let this lease period get over, we should get rid of this asset. Give it back to the lessor. We don't want this asset. This asset lo too many breakdowns is happening. So first day I thought that option money to buy the asset is part of lease payment. After 5 years I feel that I'm not going to buy the asset. When you are not going to buy the asset, 30 lakh rupees whatever you included, that will not be payable, no. Therefore you should remove that. When you remove it, automatically lease liability amount and all will have to be remeasured now. How to remeasure? Don't worry, that we will see. 2 examples you told. Tell me one more. You told me 2. One is variable lease payment, you told me. Purchase option ka reassessment, you told me. One more if you tell, then I'll tell you accounting treatment. Interest rate already over, no? Good. Option to extend, option to terminate. I have taken a property on lease for a period of 5 years with an extension option of another 3 years. Commencement day, I felt that I will not extend. Therefore, I considered lease payments only for a period of 5 years. My lease liability is present value of lease payments only for the 5 years only. But after 3 years of usage, I feel that I want to extend the lease by another 3 years. When you want to use the asset for another 3 years, lease payments also will have to be made for another 3 years. So your existing lease liability is not sufficient to accommodate the future cash flows. So today you have to remeasure the lease liability. Possible? Then reverse also possible. What is that? Reverse. First day I thought that I will extend and I considered entire 8 years ka lease liability, lease payments under lease liability. But after 3 years I feel that I am not going to use the asset for more period than 5 years. So now again you have to reassess. Tell me, sir, all these whatever we are talking now, are they not something in the nature of change in estimates? Something similar to change in estimate. I thought that I will extend, but now I don't want to extend. I thought that I wouldn't buy, now I want to buy. I thought that I will not terminate, now I want to terminate. They are all basically something in the nature of change in estimates. Do you feel that they are modifications? Do you feel that they are modifications? There is a option to extend the lease by another 3 years. First day you thought yourself inside, I will not extend. Accordingly, lease liability measured 5 years. After 3 years, inside only you are thinking that I will extend. Lease liability have to remeasure for sure. My question is this a reassessment of your extension option? Will it become modification? It is not a modification. Modification means what, you know? What is not there in the original contract, that you now introducing that into the contract. Changing in the terms and conditions of original lease agreement is called as modification. This is not a modification. I'll tell you what is modification. Suppose అసలు ఒరిజినల్ లీజ్ అగ్రిమెంటే 5 years, అసలు ఎక్స్టెన్షన్ ఆప్షనే నాట్ దేర్. 3 years is over. I want this asset for another 5 years. I went to the lessor. I told him, lessor, let us both extend the lease by another 3 years. He agreed. This is modification. What we discussed earlier, option to exercise was already there, no? That reassessment. There is always a difference between reassessment and modification. Modification అంటే అసలు ఒరిజినల్ కాంట్రాక్ట్ టర్మ్స్ అండ్ కండిషన్స్ యు ఆర్ చేంజింగ్ ఇట్ ఆఫ్. Reassessment means whatever is already there in the contract, you once upon a time assessed as something, now you are reassessing. In both the cases, liability will be remeasured, but accounting treatment will not be same. So we are not talking about modification now, we are talking only about remeasurement or reassessment of lease. So let us see here. A concept I've written little too much, but I'll make it very simple for you. Watch this. Reassessment of lease. I'm directly writing the examples here. Examples like change in variable lease payments or our assessment to buy the asset at end of lease term, or assessment to extend or not to extend the lease, etc. These are called as reassessments of lease. In this, modification should not be there. Modification as a lease contract changing is called as modification. This is not that. Okay. Now, answer is, sir, imagine you, if anything among that happens, your future ka lease payments are going to change, isn't it? Future ka lease payments are definitely going to change. You thought that you will pay lease rents only for 5 years. Now you have to pay lease rents for 8 years. So further lease payments have to be made. You thought that you will buy the asset, therefore option price you included. Now option price you will not include because you reassessed that. So because of this, lease payments will change. Since lease payments are going to change, definitely you have to remeasure the lease liability. Yes, sir. When you when you change the lease liability, what happens? Either lease liability will increase or lease liability will decrease. A corresponding effect you have to correctly sold somebody, and you have to correspondingly adjust the ROU asset and correspondingly adjust ROU asset. Lease liability increased, credit lease liability, debit ROU asset. Lease liability decreased, debit lease liability, credit ROU asset. As simple as that. Direct impact to ROU asset. Sir, will anything go to PRL? Nothing. It stays in the balance sheet. Total adjustment. Prokate adjustment me gurtu pettukovali. What is that is? Discounting rate, what is to be done? What discounting rate I should use? Should I continue with the existing discounting rate, or should I go for latest market based rate again? The answer normally should be existing rate only. No, original discounting rate, whatever you use, that only should continue. But the standard gives you 2 cases where you have to use revised rate. Therefore, this becomes important. When there is a reassessment of lease term. What is the meaning of reassessment of lease term? Option to extend, option to terminate. In this changes have come. Then lease term automatically will change. E case or purchase of asset or option to purchase the asset. In two cases, sir, you should go with latest rate or revised discounting rate. Suppose first day you measured with your incremental borrowing rate on commencement date. 3 years is over. Now again go to the market. At what rate you can raise money, work out a new interest rate or discounting rate you apply for remeasuring your lease liability. In any other case, use original rate. Whatever you used first day, same rate will continue. So quickly answer. Variable payments are changing. Which rate? Original rate. Original rate. Option to buy. Either I feel that I will buy, or I will feel that once upon a time I felt that I will buy. Now I feel that I will not buy. Revised rate. Once upon a time I thought that I will extend the lease. Now I feel that I will not extend. Revised rate. Once upon a time I thought that I will not terminate. Now I feel that I will terminate. Lease term adi revised discounting rate. Anything which is changing the lease term or you are buying the asset, revised discounting rate you use. Rest all cases la apply original discounting rate. Clear, sir? Same చెప్పనలేదు sir. Reassessment happened. Future ka lease payments pakka change होते sir. The moment future ka cash flows change, your ACM will fail first. But ACM has to work out means what? There is only one condition. What is that? ACM ka balance always should represent present value of future lease payments. Otherwise, a bloody ACM will not work. So make it work. Work out the revised lease payments and discount it to today. Lease liability already existing, some carrying amount is there. Either increase it or decrease it. Corresponding impact ROI asset give. This remeasurement which discounting rate you use, go with the guidance. Clear, sir? Chalo, before we go into modification, let's first do these questions. Come to question number 32. 31 is of doubt. Please tell me. Which one? Printing error, ma. I'm sorry. 12% ka PV factor first is 0.8929. No, it's 0.92. Printing error. Okay, thank you. Thank you, sir. Anyway. Entity W entered into a contract for lease of retail store with entity J on Jan 1, 2011. So inception date. The initial term of the lease is 5 years with a renewal option of further 3 years. The annual payments for the initial term and renewal term is 1 lakh and 110 respectively. Observe closely. First 5 years ki 1 lakh. After that 10% increase is there. 1,10,000. Then the annual lease payment will increase based on annual increase in CPI at the end of preceding year. Wow. That means whatever 1 lakh you are seeing, that is not fixed payment. That has to be updated based on consumer price index. For example, the payment due on 1/1/2012 will be based on CPI available at 31st December 2011. In this line, you know, secretly he is telling you something else. Lease payments are to be made at the beginning of the year. Otherwise, why will he use the term payment due on 1/1/2012? So every lease payment is to be made at the beginning of the year after considering the index determined on the previous day. Like that. Continue. Entity W's incremental borrowing rate at lease inception date and at 1/1/2014. 1/1/2014 is some other date, later on he will use. is 5% and 6% respectively. Incremental borrowing rate is the one what you will use for discounting basically. Continue. And CPI at the lease commencement date and at 1/1/2014 is 120 and 125 respectively. He is giving you CPA. So first day commencement date it was 120. Later on, after some 3 years, it is 125. At lease commencement date, entity W did not have a significant economic incentive to exercise the renewal option. What does it mean? The lease is 5 plus 3, but I feel that it is going to be only 5 and that 3 I am not gonna exercise. Adini feeling originally. But in first quarter of 2014, entity W installed a unique lease improvement into the retail store with an estimated life of 5 years. In retail store lo sir you install some other asset. Asset ka life is 5 years. So entity W determined that it would only recover the cost of the improvements if it exercises the renewal options, creating a significant incentive to extend. That means first 3 years you are under a feeling that your lease period overall only 5 years, but 4th year starting you got a clarity that you are going to extend and ultimately your lease period is going to be 8 years. Original 5 plus 3 years extension. Is entity W required to remeasure the lease in the first quarter of 2014? Damn well yes. You have to definitely remeasure. Yes and Rasa Sarpo sir. You have to do the entire remeasurement and show. Some a lot of twists are there. In fact, original ICA solution also was wrong in this. Later on they corrected it. Whatever you have is a corrected answer only, I guess. Anyway, it doesn't matter, we'll solve this question. Mark important, sir. Yes guys, try to solve this. Question number 32, no? Chalo. Sir, look at the date. The initial date was 1/1/2011. So on 1/1/2011, the lease term is only how many years? 5 years. Because at that stage you thought that the lease will be valid only for a period of 5 years, not more. So you should consider only lease payments for first 5 years. Now, calculation of present value of lease payments. Year beginning, sir. Lease payments. What is the incremental borrowing rate given on commencement dates are 5 or 6 or 5 or 5. So 5% and PV of lease payments. One means first year ka beginning, understand correctly. What is the lease rent? 1 lakh or 1 lakh. And that we will write later on. Second year beginning actually what I have to pay is 1 lakh plus a CPA ka effect I have to take. First year ending low whatever CPA is there, based on that I have to remeasure it. First day CPA is, how much is given? 120 or 120. This is first day. Like how it is 120 today, after 1 year one more CPA will be there. Based on that a 1 lakh has to be revised and paid. But you are not supposed to estimate that, correct? So what you have to assume, this CPA will continue for all the periods. Since the same CPA will continue, same rent also will be there. So I'm just calculating for the sake of it. If you don't want, don't do. In reality, it won't be 120 after 1 year, it will be something else. Based on that, it will get updated. But as on today, I'm not supposed to estimate all that. So 1 lakh. The third year also it will be same. I'm not doing hereafter. Fourth year also 1 lakh. Fifth year also 1 lakh. Just for clarity, I'm rating this is as on today. PV factors. And you are telling something. 1 now? Okay, 1. Then after, sir, tell me. 2. Okay, fine. 0.70. Next one. 3. 8. I'm sorry. 868. Then 2. Do all this and get me this total, please. 590. So guys, this is your total of present value of lease payments. 1 second, guys. So your entry should be on first day ROU asset account debit to lease liability. So your reassessment is happening when? Your reassessment is happening at the beginning of 4th year, correct? So up to 3 years normal accounting will continue. So next to 3 years ki, what accounting will you do? ROA asset means you will provide a depreciation. Lease liability means you will be applying ACM table. I am not interested in ROA asset ka balance, but lease liability ka balance I want to know, because lease liability how much balance is there. If I know, then only I will understand from here how much I have to update. So carrying amount of lease liability is relevant for me. ROA asset also you want to calculate, but that's of no use for us. So at least not in this sum. So ACM table I am drawing. So how many years lease it is? 5 years. 1, 2, 3, 4, 5. But I am preparing this only up to the end of 3rd year, because 4th year beginning there is a modification, reassessment. This table you should be extremely careful. Sir, ACM table what careful, sir? So many times we did know. So many times when you did, payments were made only at the end of the year. This time it is paid at the beginning of the year. Should be careful. So initial amount or opening balance was 4,54,590. This is the present value of so many 1 lakhs, including the 1 lakh what you are paying on the first day itself, isn't it, sir? So first you have to go and make the lease payment first without adding interest, because here things are payable at the beginning of each year. Normal our ACM table you are used to add interest, no, that is correct when you are paying at the end of the year, but this is something which is payable at the beginning of the year. So you pay on this amount, you go and add interest. What is the discounting rate we have used? 5%. 5%. Please do this. Closing balance. 372,320. The first year. 372,320. Again you will pay another 1 lakh. 272,320. Interest 3013. Correct. 285,936. Again minus 1 lakh. 185,936. I'm sorry. Next one, this 5%, sir. Closing, sir. 233. So 195,233. You can stop there. You need not go further. Not required. Sir, that fellow told that reassessment happened in the first quarter of 4th year, but exactly which date it has happened he did not tell us. That means whether it has happened after the payment of lease or before the payment, data is not very clear. So I am doing what ICA has done. What they have assumed is this reassessment happened before you paid that money, is what they have assumed. Okay, So that appears safe also. Why it is safe is, apart from your reassessment because of your extension, there is one more adjustment now. CPI index lo change came. What change? Till yesterday we considered only 120, 120, 120, but after 3 years is over, he says that CPI index is 125. Sir, what about first year, second year ending, third year ending? Where is that CPS? Why did you not give us that? Sir, question of data is not there. Means imagine that you estimated 120 every year. No, that became true in the first year also, second year also. Third year ending ka CPI is 125, which they have given it as beginning of fourth year. So there are two changes now for you. One, there is a reassessment of lease term where lease term is getting extended. At the same time, you got clarity about your variable payments also. You have to update now. So this we have done just to understand the existing carrying amount. Okay, now at beginning of year 4, due to reassessment, there is an change in lease term, due to which lease extends by another 3 years. That is hereafter 5 years, 5 remaining years. Original 5 plus 8 lo 3 over, remaining should be 5. And there is an updated CPI index at 125. So because of this, your remaining lease payments ke clarity you got. First you identify the remaining lease payments, discount it to today, one present value will come. The existing number is 195,233, remeasure the lease liability. Correspondingly go and hit your ROU asset. As simple as that. Very, very easy case. So work out the remaining lease payments now. Table year, beginning only. Lease payments. Present value factor set. Tell me, ma'am, is there a reassessment of lease term? Yes or no? The answer is yes. You will have to go for revised discounting rate. Revised IBR calculation, sir, which is given as 6%. Already 3 years is over now. We are in 4th year. This is now. That is on 1/1/2014. The 4 and I am rating just to continue what we have written in the ACM table. But you must understand that 4 is 0 point from your timeline point of view. You are already standing at the beginning of 4th year. So 4th year, how much lease rent you have to pay? Very good, sir. Very good. 1 lakh was the amount for 120 CPI. For 125, how much you should pay? 104,167. Very well. 5th year. Not same. Oh, sorry, same. 104,167. Why it is same is 104,167 into 125 by 120. Because data is not there, you will assume that same CPI will proceed. Here you should be careful. That fellow told that lease rent is 1 lakh for the first 3 years. Sorry, first 5 years. For the last 3 years, lease rent is going to be 1,10,000. So how much percentage increase did he make? 10%. So what you should do is 5th year ka lease rent you take, add 10% to that. So 104,167 plus 10%. This 10% another niku question lo nowhere it is explicitly visible. But you have to understand that fellow's heart. From 1 lakh in the non-cancellable period, extendable period lo he increased it by 10,000 rupees, means he is updating it by 10%. You want 10% more rent in the extended period. Pay 104, 167. Add Jane sir. 1 lakh, 114,000. Very well. You see there. We'll answer that. First, tell me 7th year rent. Good, same amount. It is not 10% per annum. He wanted 1,10,000 in each of the next 3 years. So 10% okte sir hike, not every year 10%. This is that. Now coming to your PV factors at the rate of updated 6% rate. Are you telling this? Yeah, tell me sir. How much should I rate? Careful, 1. అక్కడ తప్పు చేశారు అనుకోండి సార్, పోయిందంతే, గోన్. రైట్ నెక్స్ట్ వన్ 0.9434. నెక్స్ట్ వన్ మా 89. Only that much. This is sounding nice. Continue further. 8396. Next one. Measure this. 491,370. That's fast. Anyway, this is your updated lease liability. So from where you have to go to where? So from 195 you have to get yourself updated to 491. Sir, such a huge why sir? Why means lease period extended by 3 years. No sir, but 3 years ka lease rent ka liability gets added. Obviously that will be huge. So increase lease liability from 195 233 to 491 372. Entry sir. ROU asset account debit to lease liability. What is the difference? 96,000. That's it. Over sum. ఈ సమ్లో 2 adjustments we have seen. One, variable lease payment ka reassessment is there. Change in lease term ka reassessment is also there. Both are there. Sir, ఈ సమ్లో lease liability increased. Every సమ్లో should it increase? No, decrease also is possible. How? I originally estimated 8 years lease term, considering that I will extend the option. But after 3 years, I feel that I'm not gonna exercise that option. In that case, I have to consider only remaining 2 years. In that case, liability will be reducing. Reverse entry you have to pass. Be open for all kind of thoughts, sir. State questions lo big masala they won't do other than whatever is there. MCQs lo sir, case based MCQs, so nobody can guess what can come. So they'll give a proper case, they'll make you stand at a particular year. Now tell what is to be done. Options, the mistake option also will be there in that, so should be open for that. So every point becomes important because of MCQs. Anyway, correct. అంతే కదా. ఇప్పుడు సి ఇక్కడ పాయింట్ ఏంటంటే whenever asset ka purchase option lo change is there or reassessment is there or lease term ka change lo difference is there, what you are talking is lease term lo change ante endante originally you thought that you will borrow money only for 5 years, now you feel that you are going to borrow money for 8 years. Depending on the period of borrowing, interest rate also will change, no? That's the reason they are asking you to go for a updated revised rate. Of course, coincidentally variable rate ka reassessment also happened, but here you understand the substance of the provision. Substance says that a provision ka logic is, if you are borrowing for a more period, obviously interest rate also will be different, no? You cannot continue with your old rate. That's the reason you are updating. Of course, along with reassessment of lease term, there is a variable rate also, variable index change also, let it be there. You cannot use 2 discounting rates anyway, you have to use only one. Come to, okay, next concept you have to discuss. Okay guys, now let's coming to modification. This is almost the last aspect in lessee, sir. After this, two small concepts are there. With that, lessee accounting is over. Then lessor. Lessor next session we will do. Lessee we have to finish up today. Lessor, sir, if you are having 50 questions, in that 47 questions are lessee only. 3 or 4 small cute questions are lessor. In that one is actually not cute. Sale and leaseback is very, very heavy, except that lessor accounting is very easy, sir. So, why lessor accounting many questions are not there is, AS 19 law whatever is there, Ind As 116 also same thing is there. So, they did not package many questions for lessor. Lessee they kept, I am telling you, sir, 50 questions, 47 questions are lessee. 3 or 4 good questions are for lessor. Just formality they kept. Anyway, let's focus on lessee now. Modification of lessee, lease. Okay, fine. So we are talking about modification of lease in the books of lessee. When we go into lessor books, at that time we will talk from lessor point of view. Today, lessee point of view in discussion. Okay. Sir, first thing, remember this. Now that it is a modification, it's very clearly change in the terms and conditions. Or rather I should put it like this, it will be much more easy to understand. Change in the scope of lease, which is not there in original contract. You are changing something which is not there in the original contract. 5-year lease, option to extend for another 3 years. You may choose to exercise, you may not choose to exercise, you reassess. They are not called as modifications. Modifications means talking something which was never allowed in the original agreement. That is called as modification. It sounds same, but they are not same. One pro tip you can remember is, in modification, always revised discounting rate. Once the lease is modified, you cannot continue with the original rate. You have to definitely take the new rate today. Reassessment, it depends, whether it is related to term or purchase option, then revise. Otherwise, you will continue with the original rate. Not here. Now coming to the accounting part. First case. Your modification is increasing the scope of lease. Increasing the scope of the lease means, originally we both agreed only for a lease of 5 years. There is no option to extend term, nothing is there, only 5 years fixed. 3 years is over. Lessee went to the lessor, asked for an extension now. Sorry, originally we never thought, but now I want lease for extra 3 years. Lessor agreed. This is called as increase in the scope. Example 1. Example number 2. I made a contract to lease a 3rd floor for a period of 5 years. 3 years is over. I went to the lessor. I asked him, I want 4th floor also. This is also called as increase in the scope. Either the period of lease increasing or asset capacity increasing, both are increases only. When you see the case, you will understand that the increase or decrease or status quo is maintained. That is not a difficult part. Plus, consideration for such increase is at market terms. What is the consideration meaning? So for example, I am taking 3rd floor, I am paying monthly rent of 1 lakh. Now I am also taking 4th floor also. Pakka increase in scope, first point satisfied. But if 4th floor extra when I taking, will I pay the same lease rent or I will have to pay more? More obviously. That more should be in market terms. That can be higher than 1 lakh, lower than 1 lakh. I am not talking about that. Independent ka 4th floor had he rented, how much rent he would have received, other rent you should be paying. if these 2 points are satisfied, the standard says if these 2 points are satisfied, then answer is very easy. E case will never come in the exam. Account the modification as a separate lease. It is as good as you took some other property from some other lessor. Separately go and write ROU asset account debit to lease liability freshly, as if 4th floor separately you have taken from some other owner. 3rd floor ka separate accounting will happen, 4th floor ka separate accounting will happen, because this is an increase in scope and the consideration is independently arrived at. There is no concessions given to you because you are already existing tenant. Pakka increase also, not for decrease, only increase A. Plus extra consideration should be on market terms. It should be commensurate with the market lease rent. Then E points are satisfied. Then separate lease. You said no. Sir, you know what is the meaning of no here? Which condition? Any condition can fail. Correct? No? Both the conditions you have to pass. Either it is not increase. That means it should be a decrease. Or it is increase only, but consideration is not at market terms. In that case, only modification ka actual accounting will come out. Separate lease and a point will not be applicable there. Here, put earphones and listen. Anyway, that's bad planning. Anyway, enjoy Dorkan. Of course, Dorkan very unlearn ko momata. Anyway, if it is not any of these two conditions, the next question we'll ask is there a decrease in the scope? Next question is it a decrease in scope or any other case? You know what is easy? This one. Again, less likely. A difficult ade vastund sir. Any other case lo sir, the answer is simply remeasure the, you modified, no sir, definitely lease payments will change, term will change, or term will increase or decrease, something will happen. Because of that, lease payments future ka will change. Remeasure it, and correspondingly you have only one fellow, poor fellow, adjust ROU asset, use revised discounting rate. Over. There is only one thing you have to learn now, which is the most important one and confusing one, but it won't be that confusing. You are all pro. You will learn it very quickly. First of all, keep in your mind some example for decrease in scope, then steps you will understand. First two steps by heart gotten sir. 2 questions are there. Second question and full clarity just automatically it will come. You just need patience. Decrease in scope, one example I am giving. Listen. I originally took let's say some 10,000 square feet of land or 10,000 SFT of building on rent for a period of 5 years. I paid rent in first year, second year. I am now standing at the beginning of third year. I feel that this much SFT is not required. So we will not use 10,000 SFT, 5,000 SFT is enough for me. Second year ending or third year beginning, I ran to the lessor. I took 10,000 SFT ka space. I don't need this much. 5,000 is enough for me. Remaining 3 years is no. Let us modify. Our remaining 5,000, you rent it to somebody else. I want only 5,000 SFT. Correspondingly, rent reduction also you give me. So this is very classic case of decrease in the scope. So what was your original scope? 10,000 SFT. Revised scope 5,000 SFT. 5,000 SFT means the entire floor ka size roughly or little more than that. Now what accounting you should do is blindly follow the steps, nothing else. Step number 1, decrease the ROU asset representing scope reduction. Sir, in your balance sheet, whatever ROU asset is there in the year 2 ending, that was representing your right on how much SFT? 10,000 SFT. Third year beginning, you said that you modified and you are taking only 5,000 SFT. There is how much reduction now? 50%. The ROU asset lo straight 50% minus it. Because your ROU asset is for 10,000 SFT. No, I want only for 5,000 SFT. Cancel it. Sir, what entry? Don't go into entry. First number say. Interest will come third step lo. So you have to reduce some asset ka value. Remember how much? 50% you have to remove. Chalo, over. Next. Step number 2. Decrease lease liability representing scope reduction. What does it mean? Taking lease liability and minusing 50%. Listen, it is like that in this example, but it need not be like that. Thought process you understand. Thought process is, for example, per annum I agreed to pay 1 lakh rupees rent. For how much SFT? 10,000 SFT. Like that only I measured lease liability first day. 1 year ending over, second year ending over. Today my lease liability is measured keeping in mind 1 lakh rupees lease rent per annum for 10,000 SFT. But my revised SFT is not 10,000, it is only 5,000. What I will think is, on the first day only, had I taken only 5,000 SFT instead of 10,000 SFT, then the lease rent also I would have paid only 50,000 instead of 1 lakh. Had I accounted like that, today my lease liability would have been how much? So from the first day itself, had I taken the lease only for half of the property, today na carrying amount would be how much? Simple, it will be half of your carrying amount, because you are applying ACM, no? ACM lo your liability at the end of second year represents present value of future 1 lakh, 1 lakh, 1 lakh. Had you contracted to take only 50% of the property, your carrying amount today would have been represented the present value of remaining 50, 50, 50 and 50. So all you have to do is just liability also half you remove. So step number 1 lo ROU asset ka reduction came. Step number 2 lo lease liability ka reduction came. Ee rendu club chesi write the entry. When you write the entry will not tally. Why it will not tally? Asset value and liability value will be same on first day, not subsequently. Asset you add so many other stupid things also, no? Initial direct cost, did you add? You added. PV of decommissioning cost, added. Advance payment, added. All this you added. Thereafter you started providing depreciation. But where are on lease liability you are doing ACM, definitely our numbers will not match. So even if you remove straight 50% from the asset, straight 50% from the liability, our reduction amounts will not match. So what you will have to do is step number 3. The difference between step 1 and 2 is a gain or loss in your PR. Sir, what entry will I write? What entry you will write? You know, no sir, ROU asset you have to decrease. Lease liability you have to decrease. What is the entry? Lease liability account debit to ROU asset. Entry pakka tally ga sir, gap will come. This is step number 1 number, this is step number 2. A gap will happily go off into PRL. Last something you have to do, which you will easily accept. You all know already, you just don't know that, you have to tell that now, but you know it. What is that is, after your modification, your future lease payments changed. But lease liability you have to apply which method? ACM method. ACM method if it has to work. What is the condition? your lease liability balance today should represent the present value of future lease payments. It won't now. Why it won't? What did you do? Already some carrying amount is there. And that randomly you removed 50%. Some other stupid number is there now. E number you have to remeasure it to reflect present value of revised future lease payments. When you remeasure it, what will happen? Either lease liability will increase or lease liability will decrease. Correspondingly adjust it to ROU asset. So till now what did we do is scope reduction ka adjusted. Now what I am asking you is adjust this liability account to reflect the present value of future lease payments, because if you don't adjust that, ACM will not work from tomorrow. Over. So now remeasure the lease liability to reflect present value of revised lease payments and correspondingly adjust to. If you closely observe, this and step 4 both are same. There also you are remeasuring, here also you are remeasuring. Anyway we have to remeasure now sir, why to do step 1, 2, 3? That's wrong. Remeasure చేసినప్పుడు entire adjustment will go only to ROU asset. Here liability is getting remeasured in step 2 and step 1 ka step 2 ka gap is going into PRL. Once you do the scope reduction ka part correctly, now remeasurement comes separately. That has to be done by correspondingly impacting the ROU asset. When you do the numbers, you will get more control on what I am trying to say. But roughly, at least if you are able to understand, job is done. So overall modification scope is only this much, sir. If both the conditions are satisfied, separate lease. In that case, there is no modification only. Separate entry you will write happily. If both the conditions or one condition also is not satisfied, then I'll ask you, is it a decrease in the scope? If you say yes, step 1, 2, 3, 4 you have to apply. If you say no, then it is as good as you are doing a reassessment. Reassessment, what did we do? Just remeasure the lease liability correspondingly impacted to ROU asset. Same thing. Reassessment, what you did, same treatment here. Modification also same treatment. Decrease in scope, you should be careful. Chalo sir, let us do questions on decrease in scope. Yes. Sir, question number 33 we need not solve, but just read the question once. Lessee enters into a 10-year lease for 2000 square meters of office space. At the beginning of year 6, the 10 years or 6 years is over. Lessee and lessor agree to amend the original lease for the remaining 5 years to include an additional 3000 square meters of office space in the same building. Already 2000 I am having, extra now I want 3000. That means definitely it is an increase in the scope. The additional space is made available for use by the lessee at the end of second quarter of year 6, whatever. The increase in the total consideration for the lease is commensurate with the market rate for the new 3000 square meters of office space. What he says, there is an increase in scope. Since there is an increase in scope, I have to pay extra rent. The extra rent is commensurate with the market terms. So all the conditions are satisfied. So ideally you should treat it as a separate lease. He is putting some small trap for you. Read. Adjusted for, that means market rate you are paying, but adjusted for discount that the lessee receives, reflecting that the lessor did not incur cost that it would have otherwise incurred if leasing the space to a new tenant, example marketing cost. What he says is, suppose sir, 4 floors is there sir, 3rd floor I am already operating. 4th floor recently one existing tenant vacated. Now what will the owner do? Again he have to put ads and all, he have to tell the brokers and all, Arey Babu, find me some new tenant. Before he did that, I went to him. I told him that sir 4th floor also I only want. He says, I am not giving you any discount, whatever market rent is there, that only you have to pay. But just because an existing tenant you are only taking this, I will give you a small discount which I would have anyway incurred for marketing expenses. That much discount I am giving, but I am not giving you any additional discount. That means you are not getting any excluded deduction because you are an existing tenant. He saved something because of you that he is passing on to you. This is not a violation of the provision. Therefore, this will be treated as a separate lease contract. So he says that lessee accounts for the modification as a separate lease. So it is as good as the first asset is separate, second asset is separate. Various questions. Come to next one. Extension of lease term increase. Let us do this first. 35 you will do. 34 is easy question, sir. Very cheap one. Lessee enters into a 10-year lease for 5,000 square meters of office space. The annual lease payments are 50,000 payable at the end of each year. The interest rate in the lease cannot be readily determined. Lessee's borrowing rate at the commencement date is 6% per annum. So you will use 6% only. At the beginning of year 6 and 5 years is over, lessee lessor agree to amend the original lease to reduce the space to only 2,500 square meters of the original space starting from the end of first quarter of year 6. What he says is original is 5,000, revised is 2,500, exactly half Boeing's reduction. The annual fixed lease payments are 30,000 hereafter. Lease payment is not exactly half of 50,000, 25,000. The revised lease payment is 30,000. He increased it. Latest discounting rate, incremental borrowing rate today is 5%. How should the said modification be accounted for? Easy question, but correctly apply the steps. If you understand this well, next question you will be able to do well. That's the maximum question in modification. E question will be used as your practice. So correctly tell me the number, sir. 35. What is your commencement date? Dates are not given, no problem. At commencement, nothing will happen. Year, lease payment, PV IFA at the rate of 5. First day, 6%. Present value of lease payments. Lease rents are anyway payable at the end of the year only. I need not keep too much pressure in my mind. Life is 10 years. Every year how much you have to pay? 50,000. Work out annuity factor 6%, 10 years. Answer whatever you used, tell me that. 7.36 you used. 360. And that's all. Multiply this more. 3,68,000. Exactly, yeah. Very well. 3,68,000. That's it. So first day you would have recorded an entry like ROI asset account debit to lease liability. See, ma'am, modification is happening at the end of 5th year or beginning of 6th year rather. If I have to start accounting for modification, first I should know the carrying amount of these two accounts on the date of modification. Reassessment ki ROI asset avasam ledhu neeku. Liability remeasure avutundi, correspondingly ROI asset ki you will adjust. But decrease in scope lo ROI asset ka balance also has to be cancelled. So I need the carrying amount of ROI asset. So if it is required, we will work out. Otherwise, time pass will work out. There is a modification at beginning of year 6. So first calculation, carrying amount of or existing carrying amount of RU asset at beginning of year 6 or end of year 5, either way. Correct, sir. Half, no? 368,000 minus 1,000 into cumulative 5 years depreciation you would have provided. So it would have been appearing at 1,84,000. Asset is fine. Now coming to the liability part. carrying amount of lease liability at beginning of year 5, sorry, year 6 or end of year 5, either way. See ma, prepare ACM table for 5 years, closing balance you rate. That is one way, but there is another smart way. What is that? If you apply ACM method, the balance on any day will be equal to present value of future cash flows discounted at original discounting rate. అది అప్లై చేసుకోండి సార్, 1 లైన్లో ఆన్సర్ వస్తుంది. నో ఇది ఐసీఎం టేబుల్ వేస్తుంటే వేసుకో, డెఫినెట్లీ ఆన్సర్ విల్ బి 100% ఆన్సర్ విల్ బి సేమ్. Already we proved it in Ind As 109. No, again and again, how many times will you prove? Is equal to present value of future lease payments, remaining lease payments discounted at original discounting rate. Yeah, remaining lease payments are for how many years? 5 years. So 50,000 into PVIFA, 6% of for 5 years. 50,000 into ఎంత వచ్చిందమ్మా ఇది? 21 600 20. Okay, fine. In existing or apply ACM table. Any which way answer will be same, sir, nothing to worry. Now the modification is a decrease in the scope from 5,000 meters to 2,500 meters. That is a decrease of 50%. If there is a change of 50%, so step number 1, decrease ROU asset by 50%. Therefore, reduction in ROU asset is equal to 182 and 186, 184. Okay, sorry, 184,000 into 50%, 92,000. Remaining balance will be another 92,000. That will later on summarize. Okay. Step number 2. Decrease lease liability by 50%. So lease liability reduction by 50% is normally whatever carrying amount is there, in that half only you have to remove. Every sum will it work like that, and it will not. Ee sum lo why it is working like this is, it is like this, sir. First I am actually paying 50,000 for how many square meters? 5,000 square meters. Had I taken originally only, not for 5,000 but for 2,500, then at 50,000 place I would have had 25,000. So half only I would have had. Therefore today also, instead of 210,620, I would have had 105,310. Are you understanding, sir? So I'm computing like that. Instead of again redoing the whole thing, I'm directly removing 50%. Even if you say that my original rent would have been 25,000 only, so therefore if I apply ACM table for the first 5 years, today my balance would have been 105,310. So from 210,620, 105,310 how much reduction is required? Like that. Instead of making you do the whole thing, I am directly doing it off. So that is equal to 210,620 into 50%. 15310. Right, sir? Now step number 3. Entry lesson direct. That will be, life is simple. Lease liability account debit 105,310 to ROU asset 92,000 30 now. Gain came. Sir, why did gain come, sir? Why did gain come means the liability decrease is more than the asset decrease because of your scope reduction. That is good thing, no? That's why. Sum over, not over. In stage what you do is work out revised carrying amount of ROU asset. It was 184 nicely. You went and removed 92,000. It became 92,000. Revised carrying amount of lease liability. It was 210,620 minus you removed 105,310. It became another 105,310. ఈ స్టేజ్లో మీరు ఉన్నారు సార్. ఇప్పుడు వాట్ ఆర్ యువర్ రివైజ్ లీజ్ పేమెంట్స్? యూ నో. వాట్ ఆర్ యువర్ రివైజ్ లీజ్ పేమెంట్స్? 30,000 ఫర్ అనదర్ 5 years. You know your revised lease payments. You also know that lease liability ACM will apply. If ACM has to apply, then lease liability account should reflect the present value of revised lease payments discounted at revised rate. A remeasurement చేయండి సార్, అంతే. Step number 4. Remeasure lease liability to reflect the present value of revised lease payments in future. Obviously you have to use revised discounting rate. Entire modification lo revised discounting rate. Reassessment rate depends. So what's my remaining life, sir? Okay, you want me to raise 6 to 10 now? Anyway. What are lease payments revised for? 30,000. PV IFA use at the rate of 5%. Careful now. 9. Right. Present value of lease payments 123,000. Total also same, only 129,885. What is your existing balance? 105,310. So 105,310 inch you have to jump to 129. Increase the lease liability from 105,310 to. Chalo sir, write the entry now. ROI asset account debit to lease liability amount 570. Right sir, right. Are steps like how you wrote as it is we executed. ఇప్పుడు మీకు ఇందులో ఎక్కడ కంఫర్ట్ రావాలంటే సార్, సెకండ్ స్టెప్ యూ షుడ్ బి కేర్ఫుల్. ఐ డిడక్టెడ్ 50% దేర్. ఇట్స్ నాట్ లైక్ ఎవ్రీ పర్సెంట్ యూ వర్క్అవుట్ సమ్ పర్సెంటేజ్ అండ్ రిమూవ్ లైక్ దట్. నాట్ లైక్ దాట్. ఇక్కడ వై యూ రిమూవ్ 50%? ఐ టోల్డ్ ద లాజిక్. వాట్ వాజ్ దట్? హ్యాడ్ ఐ ఒరిజినల్లీ ఓన్లీ టేకన్ లీజ్ ఫర్ హాఫ్ ఆఫ్ ద స్పేస్, ఐ వుడ్ హ్యావ్ పెయిడ్ ఓన్లీ హాఫ్ ఆఫ్ ద రెంట్. ఆ మోడల్లో లీజ్ లైబిలిటీ వర్కౌట్ చేసుకుంటూ వస్తే టుడే ఐ వుడ్ హ్యావ్ హ్యాడ్ 105,310 ఓన్లీ, బట్ ఇన్ మై బుక్స్ 210,620 ఈజ్ దేర్. So reduction should be 105,310. Adi original calculation is smart calculation. Directly we did instead of making that whole what if. Anyway, this is done. Did he do this entry amounts you got? He got 24,564. Mankan doshindi 24,575. Somewhere we have taken more accurate PV factors. That fellow might have used only 2 decimals. That's okay, no problem. Come to the next one. Chichi, not this one. This one. Lessee enters into a 10-year lease. Mark this important, sir. It's a good one. Lessee enters into a 10-year lease for 2,000 square meters of office space. The annual lease payments are 1 lakh, payable at the end of each year. The IRIL cannot be readily determined, therefore IBR he is using as 6%. Again, as usual, at the beginning of year 6, they agree to amend the original lease. Amend means modification only. To include a 1500 square meters of the space in the same building starting from the beginning of year 6. Already you are leasing 2000. Now additionally you want another 1500. It definitely increase in the scope. There is no doubt in that. Continue. And reduce the lease term from 10 years to 8 years. You are standing at the end of 5th year. Ideally remaining lease period should be another 5 years, but you are saying that remaining lease period is another 3 years only. Decrease in scope. The annual fixed payment for the 3500 square meters. What is 3500? Original 2000 plus E updated 1500 total will be payable at the end of each year, and it is 1,50,000 it seems. Okay. Lessee's incremental borrowing rate at the beginning of year 6 is 7% per annum. And ultimate news, he comes and tells us that the consideration for increase in the scope of 1500 square meters of space is not commensurate with the standalone price for that increase adjusted to reflect the circumstances of the contract. Increase in scope A, but second condition fail. What is second condition? The rent what you are charging, the lessor what the rent is charging to the lessee is not on market terms. If it is not on market terms, I cannot account it as a separate lease. You will fall into which case? Second case. Second case, I will ask you one question. Is it a decrease in scope? 1500 square meters is not decrease in scope. So you will fall into other reasons. Other reasons, the answer is you simply have to remeasure and correspondingly adjust it to ROU asset. A 1500 square meters for a thing is not going to trouble you at all. What was your original rent? First line given 1 lakh, and now updated rent 1,50,000. So because of extra space you are paying how much extra? 50,000 rupees. But that 50,000 is not commensurate with the market terms. So 50,000 ki extra liability you have to create, correspondingly impact ROU asset. 50,000 will not trouble you at all. Your problem comes only with the decrease in the lease term. Original lease period was 10. Now we are reducing it to 8. That should trouble you. 50,000 is cheap fellow. Consequently, the lessee does not account for the increase in the scope to use 1500 square meters as a separate lease fine. How should the said modification be accounted for? Take seriously, it's a good question. Try to solve. Question number 37, please. Dates are given or not given? No. First one, at commencement. Years. Lease payment. What is the incremental borrowing rate day 1? 6%. Oh, just like previous amount. Okay, no problem. So lease is for a period of 10 years. Lease payments are 1 lakh originally agreed. Work out annuity factor. Previous sum you did no. Same thing, no? 7.36. So it will be 7 lakh 36,000. So your first day ROU asset account debit to lease liability. He is not asking the entries, he is asking the effect of this modification, but we will write entry also so that you will be more comfortable. At beginning of, okay, first let's work out carrying amounts will work out. Carrying amount of ROU asset at beginning of year 6 is equal to 736,000 into 5 by 10. Enta madi 368,000. Okay. Carrying amount of lease liability at beginning of year 6. all you have to do is work out the present value of remaining lease payments to today. Remaining lease payments is for how many years? 5 more years. So that is 1 lakh per annum into PV IFA 6%, 5 periods. And the Maidi 4.21 2124. Okay, fine, no problem. Do it, multiply 21,240. Sir, I hope you are able to understand this technique. If you remember 109, you will remember this. You do not like this, you want to do the lengthy way, do the ACM table. That is also there. Okay. Chalo. At the beginning of year 6, there is a modification resulting in, one is decrease in scope, that is reduction 420 into 40 is correct only, no? Okay, continue. That is reduction in lease term from remaining 5 years to remaining 3 years only. Term low change also is scope only. Size low change also is scope only. And increase in scope, additional space taken on lease for 3 years at rent not on market terms, 50,000 per annum. How do you know it is 50,000? Because 1,50,000 we have to pay hereafter. Already I was paying 1 lakh, so 50,000 is purely because of that additional space. Aim లేదు సార్, separately you do, life is easy. Decrease separately you handle, increase separately you handle. Ultimate effects will be ROI asset lease liability only, except one small amount which will go to PRL. That's the reason separately we are doing. Otherwise I would have clubbed everything and done. You will have full control on this question if you do separately. You will watch now. First one, decrease in scope. Step number 1. Existing carrying amount of the asset or ROI asset, which we already worked out, 3,68,000. Normally, sir, 368 I would have depreciated over a period of next 5 years. But had I known on first day only that I would have used this asset only for a period of 8 years, today my balance should not be 368,000. No, correspondingly reduce it. Carrying amount of ROI asset, considering the reduction in lease term, is equal to 368,000 if it is for remaining 5 years, but I am going to use it only for 3 years. So I want how much now? 220,800. Therefore reduction is ఎంత మాది 147,200. Okay. You could have directly done 368,000 into 2 by 5 అని చేయొచ్చు, 368,000 into 40% అని చేయొచ్చు. There are different ways of doing. I did not want to bring that 40% because if I bring that 40%, step number 2 లో కూడా చేసేస్తుంది. That's the reason I did like this. Of course, you could have directly worked out because from 5, if you are becoming 3, that's a reduction of 2 by 5 only, no? So that's 40% exactly. 368,000 40% is మీకు 147,200 వచ్చేస్తుంది సార్. సేమ్ థింగ్ యూ కెన్ వర్క్అవుట్ డైరెక్ట్లీ ఆల్సో. స్టెప్ నెంబర్ 2, existing carrying amount of liability is equal to 421,240. Just because 40% lease period లో reduction is there, ఇందులోంచి డైరెక్ట్గా 40% తీస్తా అంటే నాట్ యాక్సెప్టబుల్. దట్ ఈస్ ద రీజన్ ఐ డిడ్ నాట్ ఈవెన్ డూ అసెట్ ఆల్సో ఇన్ దట్ వే. అసెట్కి ఇట్ వర్క్స్, లైబిలిటీకి ఇట్ విల్ నాట్ వర్క్. వై ఇట్ విల్ నాట్ వర్క్ ఈజ్, అసెట్లో సార్ డిప్రిసియేషన్ ఒకటే ఉంటుంది సార్, టైమ్ వాల్యూ ఆఫ్ అడ్జస్ట్మెంట్ విల్ నాట్ బి దేర్, బట్ లైబిలిటీకి ఏసీఎం విల్ బి వర్కింగ్ ఆన్. సో ఆ 40% డైరెక్ట్లీ ఇఫ్ యూ మైనస్ ఆన్సర్ వోంట్ కమ్. యూ షుడ్ కేర్ఫుల్లీ హ్యాండిల్ దిస్. హౌ యూ షుడ్ థింక్ ఈజ్, originally only if my lease period instead of 10 years it was only 8 years and 5 years completed, today what would have been my carrying amount of lease liability? I want that now. Already something is there, a gap is a reduction. I hope you are understanding. Earlier some, how did we say, you are paying a lease rent of 50,000 for 5,000 square meters. Hereafter you contracted to take only half. So my thinking is, originally only had I taken 2,500 square meters, how much liability I should have had today? You would have had half. ఆ కేసులో ది లీజ్ రెంట్లోనే హాఫ్ కాబట్టి డైరెక్ట్లీ 50% I minused. This time the adjustment is not in space. This time the adjustment is in years. When the adjustment is related to time, directly percentage, if you work out, you will get wrong answer because time value of money is involved here. Based on years, time value of money will change of no sir. That's why how you have to think is, if originally lease was taken for 8 years only, then as on today carrying amount of lease liability would have been, how much it would have been? ACM table you can do, smart work also you can do. Present value of lease payments for remaining how many years? 3 years. Anta original, which is how much sir? 1 lakh. 1 lakh into PVIFA into what is the discounting rate? First day used 6%. Remaining period is 3 years. I'll do this math. 2.6737. 73, only that much. Multiply 300. Very good. Your present liability is this, your liability should have been this. So now identify reduction. But 40% go to the RAL sir, that will not work here. Earlier some it worked because of the scope low reduction, in space low reduction. This is not space, the time low reduction. Therefore reduction in lease liability is equal to 421,240 minus 267,300. ఎంత మాది 153,940. So you can observe now, asset lo decrease is this, liability lo decrease is this. There is a gap. That gap will go to PRL. So lease liability account 153,940 to ROU asset account debit 140, sorry, credit 147,200 to gap Sir, you told you should use revised discounting rate now, sir. I told you use revised discounting rate for remeasuring the lease liability. Am I remeasuring now? Anta notional calculation, sir. Had I originally taken contract for the decreased scope, today my asset would have been how much? Today my liability would have been how much? A gap should go to PRL. Up to the notional calculation. Now remeasurement jayada. Step number 4. Remeasure the lease liability to reflect present value of revised future lease payments at revised discounting rate. Forget about increase in scope. If you want, you can increase the scope here also. You can do that. I want you to do it separately because I want to show you something towards the end. If you do it here also, answer will be correct only. But because the treatment, as I showed you earlier, decrease in scope lo step number 4. Other reasons lo accounting treatment both are same. So you can club and do actually, but do it separately. You'll have a better control there. So lease liability should be equal to, what is my revised lease payment? 1 lakh, not 150. 50 is for increase in scope, leave it. 1 lakh into PVIFA 7%. For how many more years? 3 years only. 6243, 262,430. So from your existing lease liability, jump to 262,430. What is your existing lease liability? This one, 267,300. Because it was 421, you reduce 153, it will come to 267. From 267, you now come to 262. So reduce the lease liability from 267, what was it, 300, to 262, 430. Entry, sir. Lease liability account debit amount, sir, 2 ROUs. Enta madi 4870. Correct. Chalo, sir. Sum is over. No, there is one more thing. What is that? Increase in scope. Not at market terms. Sir, where there is an increase in the scope, not at market terms, all you have to do is remeasure the lease liability and correspondingly adjust it to ROI asset. That's it. So the treatment is so incremental liability or extra liability is equal to 50,000 rupees you have to pay per annum into PVIFA 7% 3 years. 50,000 into 2.6243, 131,215. With this you will liability increase, no? So you have to credit the lease liability and you have to debit the ROUs. Sir, sum as such is completed. I just want you, the extra, sir, Just understand this, you'll have more control on the question. What is the existing carrying amount of liability on the date of modification? Original from 4,21,240. 4,21,240. What is the carrying amount of lease liability after modification? You did not work out that, huh? No problem. Here I will work out. Therefore, carrying amount is equal to. Here you updated to 262,430 now. 262,430 plus you further increased by 131,215. ఎంత వచ్చిందమ్మా ఇది? 645. ఇది నీ ultimate lease liability in the balance sheet. So the revised liability. Instead of working like that, can't I work out like this? What's my revised lease payment? 1,50,000. For how many years I have to pay? 3 more years I have to pay. I will directly multiply with the annuity factor 7% for 3 years. Use the same annuity factor what you used, no? 1,50,000 into something you told me. 2.62. Check. 645. Can't I do this directly? This directly cheyochu sir. Which means from 421 to 40 you are coming down to 393,645. Sir, ఇది నా దగ్గర ఆల్రెడీ ఉంది. ఇది నేను ఇట్లా 1 నెలలో క్యాలిక్యులేట్ చేయొచ్చు. ఈ డిఫరెన్స్ డైరెక్ట్లీ ఐ కెన్ వర్క్అవుట్. ప్రాబ్లమ్ ఈజ్ ఈ ఎంటైర్ డిఫరెన్స్ కెనాట్ బి ఇంపాక్టెడ్ టు ROU asset. Some amount has to go to PRL. No, that is the reason a roundabout procedure has to be done. Only liability you want, directly would have done. But ROU asset how much are you impacting? PRL how much you are impacting, that you want to know. That's why all these steps are drama, sir. But only lease liability is a question. Suppose an MCQ came, only lease liability. At step 1, 2, 3, 4 is going to picture the time waste cheskokudu sir. Directly remeasure. Existing how much is there, revised how much I want. I entire gap cheste meeku reduction liability vachestadi. Even why we are doing, if you understand directly why you can't do, you will understand. Now you see what is the total reduction? 27,000. In 27,595 you can explain the reason, sir. Because of scope reduction you killed the liability by how much? 153,940. So here reduction of lease liability due to scope decrease 153,940. After that, when you applied step number 4, your lease liability further reduced by how much? 4,870. Observe closely. Closely observe. Step number 2, when you did, from your existing number you had to drop down to 267,300. Later on, from 267,300 again you drop down to 262,430. Go and observe the calculation of 267,300. Observe the calculation of 262,430. 267,300 is remaining lease payments discounted at the rate of 6%. 262,430 is ade number but discounted at the rate of 7%. When you increase the discounting rate, what will happen to present value? It will fall. Because of that 4,870 has decreased. That means reduction due to increase in discounting rate. 6% became 7%. So present value liability will fall down. So because of that, liability further decreased by 4,870. Count, add first one and second one. 153,940, 4,870. 158,810. Look at the last entry what you wrote. ROU asset account debit to lease liability. This time there is an increase. Increase in lease liability due to scope increase. 131 add all these three, you will get 27,500. 100% you will get. Means you will have a full analysis of what happened where, why the numbers changed and all. ఇప్పుడు మీరు ఇంకా డీప్గా పోతే సార్ ఈ 131,215 ఇది కరస్పాండింగ్లీ అసెట్ ఆల్సో గాట్ అడ్జస్టెడ్. దిస్ ఆల్సో గాట్ కరస్పాండింగ్లీ గాట్ అడ్జస్టెడ్. దిస్ వన్ డిడ్ నాట్. Liability fallen down by 153,940, but asset has fallen down only by 147,200. Therefore, a 6740 gap went to PRL. If that was not there, no, then I could have directly done this and ever recorded an entry called as lease liability to ROA asset. The entry I would have written, but why I could not write that is the entire decrease is not to be correspondingly impacted to ROA asset. By the way, is the carrying amount of lease liability. No, what is the carrying amount of ROA asset? What was the last time you measured ROA asset? Scope decreased, you measured. So you reduced it to 220,800. Later on you decreased further 4,870. So 220,800 minus 4,870. Lastly you added 131,215. ఎంత ఇది 340. So ultimately it stands at 347,145. See in beginning low, sir, this fellow was standing at 368,000. Take your calculator. 368,000. Somebody has fallen from 368,000 to 347,145. How much decline is that? 20,855. This is ROU asset low reduction. This is liability low reduction. Check the gap. 27,595 minus 28,55. That's exactly the effect in your PRL. So different ways you can play. If you know separate accounting, means how to separate this. You don't want to waste time in the exam, then you can do one more smart work. What is that is step number 4 I did know, remeasuring the liability. Kada 1 lakh gaakunda directly 1,50,000 పెట్టేసుకుంటే you need not separately do this, because ఇది correspondingly ROE asset lease liability, entry also ROE asset lease liability. You can avoid this. I just did simply to show you the analysis of what is happening in the accounts, but to avoid time waste, you can directly do that. So guys, we'll stop it here. We'll continue in the next session, sir.